Hong Kong, Nikkei Markets, Asian stocks pulled back on Monday as worries over trade tensions between the U.S. and China were reignited amid reports that Washington is planning to go ahead with the introduction of another round of tariffs. The Nikkei Asia300 Index of about 300 influential regional companies fell 1.4% to 1,278.20 after rising 0.9% last week. Losses in Asia came after the Wall Street Journal and other news outlets reported late last week that U.S. President Donald Trump was readying a round of additional tariffs on $200 billion in Chinese goods. The news eroded optimism that a possible resumption in trade negotiations between the two nations would ease tensions. Still, some investors sought comfort from expectations that the tariffs would be lower than indicated earlier. The likely tariff will probably be about 10%, the Wall Street Journal reported, less than the 25% rate the administration said it was considering. No more tariffs would still be the best outcome for the markets, but with the U.S. administration seemingly wanting to pursue its longer-term strategic agenda against China, that is unlikely to be the case, especially as there is little in the way of pain being felt by the U.S. economy or equity market. Carrie Craig, global market strategist at J.P. Morgan Asset Management, wrote in a note. Timing is also important when it comes to enacting any new tariffs. A staggered implementation is being viewed as the best of a bad situation. Casino operator Galaxy Entertainment Group declined 1.4% after Super Typhoon Mangkhut forced a near shutdown of Hong Kong and Macau on Sunday. Cathay Pacific Airways dropped 1.8% after the airline cancelled several flights over the weekend because of the storm, while Hong Kong Metro Rail operator MTR, which partially suspended its services on Sunday, ended 0.2% higher at $41.80 after falling to as low as $40 earlier. Air China fell 0.4% in Hong Kong amid weak trading in the broader market, despite reporting a 9.4% increase in passengers carried during August. China Eastern Airlines rose 0.9%. The airline on Friday reported a 9.5% increase in passengers carried last month. Ping An Insurance Group slipped 0.8% amid broad market losses even as it reported a 21.4% increase in January to August accumulated gross premium income for its life insurance business. Tencent Holdings, the most valuable company listed in Hong Kong, fell 3.3%. Indonesian ride-hailing company Gojek is aiming to raise about $2 billion from existing investors, including Tencent, to fund expansion plans in Southeast Asia, Reuters reported, citing sources familiar with the matter. Other technology heavyweights in the region also declined, with Samsung Electronics slipping 1.5% and Taiwan Semiconductor Manufacturing Co., TSMC, falling 1.1%. Property developer CapitaLand lost 0.9% in Singapore. The company serviced residents Armascat on Monday said it will buy a 70% stake in Indonesian hotel management company Green Oak Hotel Management for about $26 million. The Nikkei gauge for Singapore fell 1.2%. Data released on Monday showed the city-state's non-oil domestic exports increased 5% in August from a year earlier, boosted by stronger shipments of pharmaceuticals, food preparations, and measuring instruments, which offset a slight drop in electronics. The rise was marginally higher than the median forecast of 3.9% growth in a Bloomberg poll but below July's on-year gain of 11%, Amy Lam,